let me tell you why the Claude Code rally has started and is picking up speed, and why money is rotating back into the big toll booth stocks, as I call them, like Amazon, Microsoft, and Google. It is happening. So welcome to Options with Hans. I'm Hans Albrecht. 15 years as a pro options market maker, another 10 after that, managing a whole bunch of options income and downside protect funds, decades in the trenches, a billion in option strategies managed. I'm here to help traders and investors play this game with skill and respect for risk above all. And as always, this is for educational purposes only, not financial advice. It's your trade and your responsibility. And if you're okay with that, okay, let's get into it. So what are we going to talk about today? Well, why agentic AI changes everything, right? So if you watched a couple of my last videos, you know that I've talked about how this is the Netscape moment. What is Netscape? That was a browser that came out when the internet sort of hit the big time from a public and wide use perspective in the mid 90s. Before that, it was kind of for fun. It was like scientific experiment. You needed to be a coder. This changed everything. And that's what's happening right now with Claude Code, especially Claude Cowork, and a number of other Claude bots, as they call them. So we'll talk about why money is rotating back into those cloud giants as disruption happens elsewhere in technology. And we know the software as a service, software companies are under pressure. There is uncertainty. You're starting to feel the nervousness is palpable out there. Who is going to get hit next? What do? You go back into those balance sheets. So we'll talk about why the toll booth companies benefit no matter who wins. That's an important point. Why some platforms are becoming uncertain, and how to think about those disruptors versus the disrupted. And I'm going to give you a trade at the end. So stay tuned. A couple trades we found in the Turbo Trader Pro scanner, which our members are really enjoying, closing fantastic trades, turbo trades, income trades. I hate to give up upside, and that's what it's all about. 30 years of my insight in a point and click product. So let's talk about the Claude rally, Claude, as they say in France. We've entered what I call that agentic phase of this cycle. Claude Code, systems like it, are not chatbots anymore. They're workers. They're doing stuff. They are literally your assistants. And even some of them, like Ralph Wiggum, are working all night long while you sleep. They're doing stuff. Isn't that amazing? They read files, they run commands, they move data. That means compute demand is exploding and about to explode even more. We talked a little bit about this in the Amazon video. Amazon having a good run today. Microsoft, Google has had its run a little bit, so it's kind of treading water a little bit. The other ones are starting to really go again as they get re-rated, as I like to say it. So this is really big. Balance sheets are safety, right? There's the uncertainty in the world. What do? They often run back into balance sheets, not to mention rates with potential for inflation at some point. Maybe rates don't come down as much. I mean, certainly yields are showing you that they're not too eager to come down. And I think that plays into the big cap hands as well. So agentic AI equals compute demand. As I said last time, think of compute demand as being infinite, but just dial that back a little bit, right? Infinite's a big number. Dial it back slightly, and that's really what compute demand is going to be. The gears will not stop turning. So every agent in this agentic creation, right? What is a agentic AI? It's creating tools to basically accomplish tasks, monetizable tasks, or just productivity tasks, things that can help you in your life, things that can help companies. And what does everybody need? Well, every agent needs cloud, security, storage, bandwidth. It doesn't matter if it's Claude, Gemini, something else. Look at Microsoft is actually tied in with Claude now. Claude is in Microsoft Excel. And so you're having these interesting alliances being created, which I think is going to be a theme going forward as these entities try to figure out the strongest way to present themselves in the future, because it may not be as simple as it looks right now. There's going to be a big advantage in having mass and having market share. So, but all this stuff needs to live in the cloud. Let's just talk about our mag here, right? Which some people are saying we're out for the count. They are not. And that's why this rally isn't about hype. This is really infrastructure driven. Even though you're seeing broadening happen elsewhere, there is still lots to go in the AI phase, in the pure AI phase, and these guys are going to really benefit. So The toll booth. What's a toll booth? Well, you got to go, you got to drop your quarters in there. You cannot do anything. You can't drive on that highway without these guys getting paid. So every agent has to drive on that highway. Every mile costs money. Amazon's the biggest highway on earth. Microsoft is being re-rated as AI becomes fragmented. They've got GitHub, that which is very difficult to disintermediate. So GitHub is actually benefiting even from Claude and other LLMs that are creating agents that are doing things on the internet. The cloud providers don't need to win AI. They just need to be there. They need to host it. So all this money they're spending to have this incredible footprint in the world of cloud, you're going to see it's going to be very, very valuable in now and in short order and over time. Now, Google just launched a $7.99 AI tier. That is going to put pressure on OpenAI, and I'm sure that's part of the reason they did it. Claude and Gemini are gaining share. Claude becoming quite an enterprise strong LLM, but really we can see as we talk about with these agentic AIs, these skills that you can create, on your phone basically. Very, very solid in the sort of retail usage area as well. Gemini, of course, we've been talking about that for months. Unbelievable company, and with its fingers in everything, literally. That is Google's superpowers. They're really everywhere, right? We just live in Google's world, as I like to say it sometimes. But Claude making some inroads. OpenAI in a little bit of trouble, I would say. Now they're kind of like a PayPal. They've been around long enough that that they're not going anywhere. The pie is absolutely massive. So I'm not saying they're going to disappear. They're going to have some challenges at some point, but they are no longer the number one LLM, the number one sort of AI out there, even though they are ChatGPT, which is kind of the Kleenex brand of GPT. But there are better things out there with more trust, et cetera, with more ecosystems. Now, why money is rotating? Layer in that disruption that I'm talking about. So we saw software, the moats are cracking. Software as a service is under incredible pressure from AI. Now we're starting to see some things bounce back, because what happens when everything gets crushed in a theme, everything just comes down because they take no prisoners. Now we're starting to see some of those areas, maybe in the data center stocks, maybe in security, in some of you're going to need security. There's no question this new world is going to require an incredible amount of security. These Claude bots, basically what you're doing is you're giving them full carte blanche on your system, in your network, your system. That is really, really risky in some very, very big ways, in terms of the ability for them to kind of sort of wipe out a lot of things that you've done, some important information, number one. And number two, this is putting a lot of information potentially into the hands of bad actors who figure out how to get in through these things. People downloading scripts and skills from all over the place, willy-nilly. They may download the wrong thing here and there. So security is going to be very, very important. So not all software is made the same. I did buy some Adobe downside put spreads yesterday, kicked in nicely today, because I think that's one name that is still going to sustain some pressure. So a couple of really nice trades the last couple of days, been piling into Microsoft, into Amazon. Not as much Google right now, but we've been leaning into that a little bit in the last few weeks. Number 7 here, disruptors versus disrupted. Okay, so this is where the framework comes in. The disruptors, cloud, security, infrastructure. Disrupted, platforms dependent on human content. So I wanted to mention one thing as it relates to fragile software moats. There are going to be those gray zones. Markets are going to punish uncertainty. Is Adobe going away? Probably not. But how are they going to be doing 3 years from now? That is what the market is asking right now. It's not what was their cash flow last year. It's not what is their market multiple right now. Those things look great. Right now doesn't matter anymore. And another example of where I'm starting to see a little bit of fracturing is maybe in some of those social media stocks, right? So Reddit's value has been what? In real conversations, real people. That's the word, right? The LLMs, they need real data. You can't just live in a world of created data in a big sort of circular sort of world of just rehashing things over and over again. You need real stuff. But in an agentic world, think about it. You can create personas, you can create avatars, synthetic communities. How do you police what's real? How are you going to know what's in there? There's already bots in there. How bad is that going to get? And so if you start to view that through that kind of lens, it can be tricky, a tricky space to be in. And mentioned yesterday, I did a public show in the morning, and I said, you know what, I'm not so big on Reddit right now. I think there's some risk there, and I talked about this. And somebody else said, no, 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 I'm buying calls on Reddit. It's fantastic. Today, down 10%, down almost $20, got absolutely smoked. So is Reddit in trouble? No, it's not broken, but the market does not like gray areas, and we're seeing more and more gray areas. More gray areas means more uncertainty. What does that mean? They go into balance sheet heroes, as I like to call some of the mag and the very, very strong companies that have the toll booths and the foundational layers for our new world. Now, own the toll booths. That's what it's all about. It's very, very simple. You cannot buy everything AI anymore, in my opinion. We have to really think about who is going to get paid no matter what. And it's going to be in the cloud. It's going to be security. Think of it as picks and shovels. It's the gold rush picks and shovel store. They sell you all the equipment. They don't care if you find gold or not. They don't care that 99.9% of these skills that are going onto these Claude code marketplaces are going to be useless, aren't going to make any money. But you can absolutely bet that it's going to use compute. It's going to force those gears to keep turning, and that is going to benefit the toll booth stocks. So this is a sorting machine. It is broadening, and it is some areas that are okay. We know powers, there's a desire for power, there's a desire for rare earths. We see the themes in there throughout the tech sector. So it's not that tech and AI don't do well, it's that you have to be a little bit more selective. And frankly, as we are doing in TurboTrader Pro and Leaps, we are looking elsewhere. We've got things like Quanta that are doing well. GE Vernova that are doing well. You want to look around at things. Look what Corning did today. Absolutely took off. Why? You're going to need a whole bunch of glass. Glass, does that sound very interesting? It's not interesting, but boring is now beautiful again, because guess what we need in an industrial resurgence around the world? You need a bunch of stuff, the stuff that you can stub your toe on, and glass, copper, silver, all these things become extremely, extremely important again. So those are the areas I want to focusing in. And if you found this useful, don't forget, hit like, subscribe. I'm going to keep walking you through where I think money is really flowing as this AI shift plays out. Anybody who's been watching me knows that I've absolutely nailed it over the last year. The Microns, the Goldman Sachses, the Googles, always helps to be a few steps ahead of the market. Trade smart, respect risk. And let's take a look at one trade that I really like, that I think is going to do well, and I'm going to show you a couple of reasons why. So in the spirit of keeping things broad, we're going to go back and look at XLK, right? So this is going to be your State Street Select Spider ETF. So this is your technology, basically your big cap technology names, right? This is tech, select. You've got the big guys in there. If you watch XLK, you're basically watching MAG to a great extent. So you can see here, beautiful sort of like a pennant pattern, and then a nice little breakout here. This is where I started talking about it, about this big shift back into those balance sheet heroes, back into the toll booths. And here we are breaking out today. So we've been putting on some nice positions in individuals as well. The Microsoft, we've been leaning into Microsoft hard, Amazon extremely hard, Google already have been buying a little bit there, and Apple's starting to pick up a little bit more as the Siri Gemini hookup looks like it's happening, and it's going to come on strong over the next 6 months. So right now, one of the things that I've been doing is also looking at some of these longer term options here, right? So a leap is typically 1 year minimum, but look, 11 months, 10 months, 9 months, whatever. These are long-term options from the perspective of, being at least a couple of months. And so what I think looks interesting right here, and I looked at the option volatility, looks good, skew looks good, and I think that upside is actually not bad. It's being underpriced because it's influenced quite a bit by names that have been a little bit forgotten, right? MAG, if you can believe it, has been a little bit forgotten. If you look at the charts of IWM versus MAG, some of the broadening plays versus MAG, RSP versus the SPY, which is equal weight versus market cap, that's really telling you a story that is extremely strong right now, but paused a little bit today. I don't think it's anywhere close to being over. I think we keep broadening out, but right now we're starting to move back in. And as I said, 4 or 5 months ago, I said, it's probably not going to be a situation where we start to see big pullbacks in one or the other. I think it's going to be a game of hopscotch as the roaring 20s scenario kind of plays out a little bit. So In here, been picking up the December of 2026, the December 18th expiry. The 170s have been trading for between 6.25 and 675. So I think those are actually relatively good value in here. From the perspective that I think that re-rating is has a good amount of potential. Now, if you've been in Leaps Trader and some of the other services I have, you'll know that I've been saying for a couple of months now, I've been saying, listen, I've been shifting into stock a little bit because those option prices have been a little bit high. And where I don't want to get super involved on the option side is where things are maybe going to do a little bit of wheel spinning, not really going to get anywhere. This is an area where I think that upside is there. Another one where what I mentioned a little while ago was IWM. I thought that had that re-rating potential, and it ran up 10% up to around 272. So that had that ability for the movement to overcome the option pricing, which I think becomes a little bit more important as option prices are a little bit expensive as compared to, say, last summer, where they were stupid cheap, as I was saying. So now they're much more fair. They're more reflective of a world in the midst of disruption. So they're not as cheap. So you want to make sure that the momentum is really there before you kind of lean right into something like something that involves certainly an out of the money option, because you don't want that. If any collapse in option pricing is going to kind of hurt those out of the monies a little bit more than you think, perhaps. I've been through it. We've been through it, and that explains why, right? You get those wings kind of collapse a little bit when you get things wrong. So you want to make sure that horse is out of the barn a little bit. So I think those are very interesting, because I don't think that is really that difficult at this point. To get from 148 to 170 is really going to kind of take us into the realm of where it is game on again for these hyperscalers to really start moving the needle. Now, I am definitely a proponent of broadening, and I'm still looking at least equally into those other areas. But right now, toll booths make sense to me. And that's our video. That's our trade. We'll see you next time.